Who will be the final winner of the China-US tariff war? Trump's sharp turn. This is Alpha, the life thoughts of an ordinary investor. It contains a lot of subjective conjectures and many errors and loopholes. Please give me some guidance. Before the new week began, the Trump administration exempted some Chinese electronics exports to the United States from high tariffs. Trump's policies are indeed flexible enough, which makes it difficult for the public to adapt to such a big change in attitude. The storyline in my mind is still stuck on the scene of both sides frantically increasing tariffs, but the new policy of the Trump administration has already arrived. This is how the Trump administration explains its policy. These exempted products mainly include electronic products that are produced in China but are difficult to replace in the United States or cannot be produced in the local language in the short term. The exemptions are intended to reduce economic pressure on U.S. consumers and businesses while avoiding excessive disruption to global supply chains. This explanation is true. This policy seems to be sudden, but as we sort out the relevant exempted products, we will find some patterns. This part of the products includes smartphones, laptops, tablets, smart watches, TVs, CPU hard drives, and other mass consumer products. These products are primarily made by American companies that rely on supply chains made in China. These companies include Apple, Dell, HP, Nvidia, Qualcomm, Intel, Tesla, Cisco, and Amazon. These U.S. companies have avoided a significant increase in product costs due to this exemption, thereby protecting the price and market competitiveness of their products. According to relevant reports and analysis, exempted goods account for 20% of China's total exports to the United States. Among them, smartphones made in China, including Apple and Samsung, are assembled in China, accounting for about 80% to 90% of smartphones imported into the United States. China accounts for about 85% to 95% of these exempted electronic products imported into the United States. Apple, Dell, HP and other brands are highly dependent on the production of Chinese OEM factories. In semiconductor manufacturing equipment, although China is not a major producer, it is a key player in the supply chain. For example, assembly and testing equipment accounts for about 20% to 30% of U.S. imports. China produces about 60% to 90% of monitors and TVs imported into the United States. BOE, TCL, these are the main suppliers. For other integrated circuits and storage devices, China accounts for about 40% to 50% of U.S. imports. This includes hard disk storage cards. Overall, exempted Chinese products account for a very high proportion of U.S. electronic product imports. This reflects the U.S. market's heavy reliance on Chinese manufacturing. Trump and his cabinet members have been claiming since the start of the Sino-U.S. tariff war, China made a wrong choice and will suffer more than the United States. Trump also said he was waiting for a call from Beijing. But we saw that before he received the call from Beijing, he took the initiative to withdraw tariffs on such a large volume of goods. From the above information we can see, the companies involved in these products are basically American companies. They set up factories in China to produce and sell in the United States. From this perspective, Trump's real opponent is not in Beijing, but in Wall Street. At present, it seems that since the start of the Sino-US tariff war this year, the United States has obviously voluntarily admitted defeat in this round. The intuitive feeling is that Trump and his team are raising the tone very high, and they want to use this thunderous blow to hurt China. But when we woke up, we found that the United States had withdrawn its front line in disgrace. It seems that China has already won the tariff war. The dramatic policy changes that took place this weekend will undoubtedly bring some positive incentives to the market in the new week. Especially technology companies like Apple, which have huge production capacity in China, can breathe a sigh of relief for the time being. Imagine if the previous tax rate of 125% had been implemented. Some analysts predict that the price of Apple's new mobile phone will increase by about 50%. Faced with such a price change, how many Americans are willing to change their mobile phones? I don't know how low Apple's stock price will fall. Regarding the reasons for exempting these products, the above explanation is not just a rhetoric, I think it is the fact. The United States cannot quickly establish production lines to replace China, nor can it shift its supply chain in the short term. In addition, high tariffs may suddenly push up the prices of consumer goods, trigger high inflation, and affect the confidence of American consumers and the investment willingness of companies. Judging from the time when the exemption policy was introduced, Trump did not wait until the effects of the tariff policy became clear before implementing policy remedies. Instead, he proactively lowered the tariffs on these products before the high tariff policy had an impact on the consumer market, reducing the impact on the market. The reason may be due to the following considerations. First, the pressure on the U.S. domestic economy. Higher tariffs could cause prices of consumer goods to soar. Some analysts pointed out that if a 125% tariff is imposed on the iPhone, then the price of iPhone 16 Max may soar from $1,599 to $2,300. This will directly push up inflation and deal a heavy blow to American consumers, especially those with low and middle incomes, who are Trump's base of public opinion. In 2024, China's exports of smartphones and laptops to the United States will be $4.17 billion and $3.31 billion respectively, accounting for 80% to 95% of such products in the United States. Such a massive price increase could spark public outcry, threatening Trump's campaign promise to lower the cost of living. Second point, supply chain dependence. The United States is highly dependent on the supply chain of Chinese electronics products, which cannot be replaced in the short term. For example, large companies such as Apple, Dell, and HP assemble most of their products in China, and foundries such as Foxconn and Luxshare Precision occupy a core position. Imposing high tariffs will disrupt the supply chain, causing a surge in corporate costs, and may even cause product shortages. The United States lacks sufficient production capacity and relevant technical personnel. Shifting supply chains, for example to India or Vietnam, will take years. The third point is corporate lobbying. Big tech companies like Apple, Nvidia, and Microsoft have a great influence on Trump's administration. For example, Apple CEO Cook. These executives have been actively engaging with Trump, including attending his inauguration, donating to some events, and maintaining a good personal relationship with Trump. These big companies are a force to be reckoned with. These companies will warn that high tariffs will hurt their profit margins and market competitiveness, which may force the U.S. government to compromise to protect U.S. interests in these key industries. In addition, Trump hopes to attract these companies to return to the United States, but only if they avoid causing a devastating blow to their current supply chains. If this destroys Apple, how can we bring it back to the United States? Fourth, the market's violent reaction. In the early days of tariff implementation, global financial markets experienced huge fluctuations. Dow Jones drops 2,000 points after tariff announcement. Bond yields rose, the dollar weakened, and investors began to doubt the safety of dollar assets. Although Trump subsequently suspended reciprocal tariffs on other countries, the 125% tariff on China triggered China's retaliatory tariffs of equal intensity, which further exacerbated market panic. Trump's exemption of some electronic products from high tariffs may be an attempt to calm market turmoil and avoid an irreversible economic development trend. The fifth reason is that this is a strategic adjustment. Trump may have realized that the short-term goal of imposing high tariffs on electronics is to get China to make concessions. But he greatly underestimated the Chinese people's tolerance for pain. Maybe Trump needs to brush up on Chinese history. He doesn't know that China is good at protracted wars and that trading time for space was the reason for China's victory in World War II. Time is so scarce for Trump, and American voters can't wait. Such a protracted war would cause greater damage to the U.S. economy. When Trump realized this, he exempted key products from tariffs, which was a strategic concession, while retaining tariff pressure on other goods. This buys time and space for possible subsequent negotiations. From the above analysis, we can see that Trump had a lot of fun launching a tariff war against China and imposing tariffs on each other. But then he found that China didn't care and completely underestimated the devastating impact of the 125% tariff on himself, so he had to make rapid adjustments. Although the Trump administration's tariff policy is not completely unplanned, it appears to be a one step at a time approach. There is a general policy framework, but there are also many obvious problems. Based on our previous analysis, we know that Trump's tariff policy, based on the concept of America First, aims to reduce the trade deficit, protect domestic manufacturing, and put pressure on China, Mexico, and other countries on the grounds of fentanyl and immigration issues. He bypassed Congress and obtained authorization directly through the International Emergency Economic Powers Act, designing tax rates for different products in different countries. This shows that some planning was done in the early stages. Although there are general goals, its policy details are obviously insufficient. Lack of detailed evaluation before implementation, a work approach of starting first and then adjusting. For example, there was no adequate assessment of the impact of high tariffs on electronic products on the U.S. supply chain and consumer market, and there was a lack of a complete response plan to China's rapid and tough retaliation. The sharp market fluctuations and cancellation of corporate orders indicate that the government may not have conducted a comprehensive stress test before implementing this policy, which led to many problems being quickly exposed after the policy was implemented. Trump has been compensating for this with his flexible and fast decision-making style. Faced with market declines, corporate protests, and Chinese retaliation, he quickly exempted some electronics products from high tariffs and suspended reciprocal tariffs on other countries. This is in line with his philosophy of the art of trading, which is to find the best path to achieve the goal through trial and error. However, this one step at a time approach also exposes great risks. Once complex or more serious consequences occur, temporary response plans are irreparable. Another problem with Trump's team is the lack of internal coordination. There are differences within the Trump team. For example, Trade Advisor Navarro advocates tough tariffs, while Treasury Secretary Bessent prefers to ease market pressure through negotiations and avoid making enemies with multiple countries at the same time. Musk also publicly opposed the high tariff policy. These differences may further affect the consistency of Trump's future policies, and such team status will further increase market volatility. From the above analysis, we can see that Trump's team has many shortcomings, and it also exposes some of the United States' own shortcomings. Although this sharp turn caused Trump to temporarily lose this round, it is not the end of the game. Trump's team is still very young, just like a child who has just started to learn to walk. It is normal to fall down. The important thing is to learn something and stand up quickly. Judging from the results of the current tariff policy, no major problems have arisen so far. I believe that as long as we can reduce the trade deficit while maintaining a stable economy and allow more industries to return to the United States, we are fulfilling our commitment to America First. From this perspective, as long as Trump does not take too big a step, the United States can claim to be the winner of the tariff war. But if Trump is eager for quick success and wants to achieve trade balance and fiscal balance within 3 to 5 years, quickly realize industrial repatriation, and maintain the hegemony of the US dollar, this is almost impossible. Sudden policy changes will bring huge risks, which no one can predict. The above analysis can be regarded as a casual chat after dinner, or as an investor's thinking. In the next issue, I will talk about my views on whether there is a possibility of further reconciliation between China and the United States. Okay, let's stop here for now. We will continue next time.